Devang, what are you telling your clients now? How should they approach markets? Exercise some caution or stay fully invested? Go with the flow or go against the flow?
Good morning, Nikunj. Thanks for having me on the show. Just let me start by just harping on the fact that on 29th August, when I was last on your channel, probably we gave a call that markets would come back roaring from around 10,600, 700. And we are happy that probably that call has worked, not on a technical level. Of course, I don't see technicals, but fundamentally also we thought that there would be some valuation support which market would take. And nobody knew that this type of a desperate measure or a reform measure would come in, but probably that has helped the market not only to turn the sentiment but also on a fundamental standpoint. If somebody talks about probably macros and micros, we know that macros are not exactly as we would have wanted at 5% GDP growth, but micros, if it directly adds to the earnings of the companies which this measure has done, or it helps in reviving capex, or it sort of again gives dividends or makes price cuts which again can probably spur demand, this is going to be a sort of a bit of a game changer, at least on the supply side. Yes, so we are advising our clients that be with the great and the good stocks that we have been recommending. Don't just get carried away by the rally and don't buy duds. So probably it's not a time to buy only turnaround candidates. It's time to buy companies which are seeing earnings growth, which are having the robust business model, or which are sort of market leaders or high market share companies. That's the advice we are telling our clients, and sort of again also advising them to accumulate in tranches rather than just getting carried away that the market would see rise from here on as well.
Told your clients in August to buy, markets will come back. Are you saying that you knew about the tax cut? Because nothing fundamentally has changed. The markets have gone up because of tax cut only.
So that's what I said. Nobody knew that there would be such a reform which would come in the offing. But we felt that probably at some level market would have a floor where at least on a fundamental standpoint you feel that the valuations are somewhere around screaming buys, or some businesses large caps which were not correcting, they also started to correct, and there was a bit of capitulation which was started to happen in the market. So that's where we said that probably start buying in tranches. Nobody knew, as I said, that there would be such a stellar rally, and because there would be such tax cuts, but of course we felt that at that level, if somebody invests, there is a good probability to make money in the next 12-18 months. God has been kind, money has been made in this last 1 week. Of course, that's what we are not saying, that take this money off the table. Just keep it for another 12-18 months, buy in tranches, and that is where you probably have a lot of reason to come into the market still.
ITC, Hemang, ITC is a consumer company. They are in the cigarette business, and that cigarette business is growing. The FMCG business now is bigger than a lot of mid-tier FMCG's combined turnover. Why is ITC, Hemang, trading at a 10-year low in terms of P multiples and valuations when every other consumer stock in India is trading at a record high?
I think, Nikunj, a very valid point. The fact is that a large part of the operating profit that ITC makes today, more than about 75 to 80%, is coming from cigarettes. And though we all can debate that the FMCG component of the business, they have invested over the last about 7-8 years, and in terms of the top line, it's looking pretty good. But if you look at the operating profit or the net profit, that's no way comparable to a similar size FMCG company. So there is a long way to go for ITC when it comes to the FMCG and the food part of the business is concerned. And yes, the cigarette business, I think things are looking pretty stable. The fact that there is no incremental cess that has been introduced is also positive for them. So yes, in terms of valuations, it's looking pretty interesting. But as we discussed earlier, that the Suti stake sale, if it is done and if there is going to be an OFS, then it might put a bit of a cap on the price. But overall, in terms of the value, it is definitely looking attractive.
47 rupees for ITC. Devang, are you telling your clients to buy ITC? There's nothing to lose at this valuation.
I think, see, what we have seen is that we look at a lot of companies, the last 10-year, 5-year and 3-year performance, not saying that the historical performances get repeated, but we look at the revenue growth, PAT growth and the EBITDA growth of these companies, plus with simultaneously if these companies have grown at say 12, 15, 20%, whether the market cap of this company has also shown a simultaneous type of a jump, or in fact more than that. That is where we would be interested in wealth creation. We find that ITC does not tick a lot of these boxes except for dividend yield, which could turn out to be 4-5%, but with its stock price does not appreciate. India is not such a dividend yield market, it's more a growth market. So coming back to the point, we are sort of more bullish on companies like Dabur, companies like Marico, Britannia, Nestle, of course, which would always be expensive if you compare it to ITC, but they would not be like-to-like businesses. Yes, ITC surely on a valuation basis, as you rightly say, trades at half the valuation, or in fact less than half of HUL. It deserves a bit of re-rating, but to be very fair, we have not bought in our portfolios as yet.
Okay, there's a Credit Suisse downgrade coming in for Jubilant FoodWorks. Let's take it across to Vivek and find out what exactly is their rationale for this downgrade.
Well, good morning. Very interesting note that has come in as from Credit Suisse as far as Jubilant FoodWorks is concerned. Now, what they're saying is that the consumption slowdown is most likely reflected as far as the QSR segment is concerned. What they're saying at this point of time is that Jubilant FoodWorks is not going to be averse to the slowdown. The company has enjoyed significant triple LG benefits, or the same store sales growth benefits in the last 2 years. However, at this point of time, they believe that the consumption slowdown could hit the company further in the second half of the year, and which is why they believe that at this point of time, Jubilant FoodWorks is slightly overvalued. So what they've done is they downgraded the stock to a neutral, and what they are saying at this point of time, they've cut their triple SG growth to 4.5%. Now remember, the company was enjoyed this particular growth in double digits, so it's quite a big cut coming in. They've also gone ahead and cut their EPS estimates for this particular stock, and it'll be interesting to see how the stock reacts today, because there've also been some talk about how some of the stores weren't doing so well that the company may actually go ahead and shut down a few of them. It'll be interesting to see how exactly Jubilant Food reacts in trade today.
1 minute 40 seconds to go, and then we'll get the first pre-open rates. CK, a very basic question. Today is expiry. Does it make sense to roll over long positions into the month of October, or that one-time re-rating is over? Don't roll over your positions in the month of October by going long. What should one do? Have a bullish bias or have a very safe bias?
I think one should definitely have a bullish bias. I would believe that if you were to roll over, you definitely get some better prices in the month of October, and perhaps even longer ahead of that too. So rolling over should not be a problem. The second thing, and the second reason why one should roll over long position, is that I believe currently short positions for rollover will outnumber longs, and therefore the roll rates may remain quite subdued today. In fact, in some marginal stocks, there could even be backwardation. So I think rolling over, and I would choose to roll over towards the later part of the day, let's say in the last 1 hour or so, rather than do it early, because I think as bears find that the matching long rolls are not really coming up as they do every time, the roll rates for long rollers could really drop, and that could be an advantage for rolling over. I think the outlook remains bullish. What has happened is not a one-day, two-day affair. I think there could be much more ahead, so rolling over is a must.
Okay, all right. We've of course headed into pre-open, and just a marginal uptick it seems at the moment. No major takeaway as of now. But remember, yesterday we did see a little bit of pressure on the downside. Yes, we've had 2 days of gains, but once again, as Nikunj was saying earlier, question marks around earnings, around the fact that that uptick could be a little bit more prolonged, and perhaps in the near term that we may see some more pain yet. So the jury's out. The Nifty is still trending around 11,463. And at this point of time, it looks like we're in for a decent start, at least a flat or a steady start for now. Hemang, let's also talk about some of the auto names. We've seen a major seesaw over the last 3-4 sessions. What's the trend according to you going forward? Okay. I don't know if Hemang can hear me, so let me also welcome in Devang Mehta, who's joining us as well this morning. Devang, a whole host of stocks that we're talking about, but just to bring you in on the auto names first, because we've seen some long unwinding. We've also seen a major move across that pocket post the tax cuts, and also a move on the downside after that, some amount of profit booking. What's your take on the trend going forward now?
I think probably a lot of it was just due to the optimism of an earnings uptick in a lot of the sectors, and I think it was more a rally of disbelief where there were a lot of shorts in the system, and also there was a lot of pessimism in the prices. So I think the first leg of the rally probably on that day would have been justified, but the rally that continued on Monday was a little more overdone, and that is what is getting corrected. We have not seen yet the demand coming back. I think these are the two crucial months. If you ask me to give a call on this, it's extremely difficult, but this month and next month, where probably Navaratri starts this month, and next month is a festive Dussehra as well as Diwali. So if the festive demand does not come back even for two-wheelers or some passenger car vehicle companies, I think it's going to be a tough ride ahead. But if it comes back probably after even price cuts which Maruti announced yesterday, we can see a bit of re-rating. Again, I'm not saying that we would be the greatest buyers, but if somebody has it, the complexion has changed from at least a sell to a bit of a hold.
Okay, here's one interesting comment coming from someone who was or is known as a mid-cap maverick, Rajiv Khanna. Rajiv Khanna is a classic old-timer based out of Chennai. He believes in buying good quality mid and small cap stocks, but Rajiv Khanna, he does not speak to media, but what we've picked up from various social media platforms and private conversations is, let's hear him out. Value investor Dolly Khanna, what his views are. Okay, we'll put the view out right now, but that's not ready. What I think he's trying to say is that markets have gone higher, but earnings have not picked up. And if earnings have not picked up, then we should really wait for that transition to happen. I think that's what he's saying. The other story which I would like to point out is Axis Bank QIP. Axis Bank QIP got priced, and that is one reason why FI number is not looking all that grand, because a lot of money has already moved into Axis Bank. But what my colleague Ruchi yesterday reported, that Axis Bank QIP is one part of the story. Government is looking at selling the stake in Axis Bank, which currently they're holding up in Suti. So suddenly we are looking at a lot of supply for Axis Bank paper. What Axis Bank QIP did, it moved money back into the bank, which the bank will use for growth capital. It's a bank which is capable of lending, and it's a bank which will gain because NBFCs are not lending. But the Suti supply which will come to the market, that will come from the government, and it will have an impact on the near-term supply. So that, I think, could be an impediment for Axis Bank in the short term. CK, technically on the charts, how's Axis Bank looking?
Bank has definitely slipped, and I think the market has already started positioning itself for this avalanche of paper. Now you must understand that the QIP just got concluded today, and the Bharat 22 in which the first tranche, as per our reporter, is scheduled to be bundled with Bharat 22, which is in first week of October. Now, QIP happened at a price of 629, which is at a considerable discount to where it is trading near 700 rupees. Now, I really don't see how prices can be more at a discount than what has been offered already. And the large size of the QIP would have most likely whetted the appetite for the stock. So I think the entire Suti sale, if it were to happen, would be a complete overhang on the price. And it will not surprise me to see Axis Bank go down pretty sharply if the sales are finalized.
All right, that's the view coming in there. Let's take a look at a few more names. I'm really curious about Reliance, actually. And so, Hemang, I wonder if you can hear me now. I want to come. Okay, let me go across to Devang then. Devang, on RIL, We've had mixed views coming in this week. In fact, an upgrade, news with regards to possible spending post-debt reduction. But that debt reduction is a pretty huge overhang that we're still looking at when it comes to the counter. What would you advise? I mean, is there really any scope in the near term on an RIL on the upside, given the kind of deal expectation the markets are still hoping for so that they can reduce their debt?
I think clearly that seems to be the trigger right now, the deal expectation that is going through, and more so the market has also started to give it a huge thumbs up in terms of course, we know that Jio, they have done a lot of capex, which probably would start showing color after some time, and that is where the telecom business would come into picture, where they are sort of grabbing market share and subscriber additions, which has started to happen in the Jio fiber business. How it turns out is also anything that the street is watching clearly. Now, if you take a view that the markets from here would sort of do well, I think these are the leaders, a couple of banks along with Reliance and all, on a very street smart way also. If market is going to go up from here, I think Reliance needs to participate, and the way that the company has talked about the debt reduction, whether the path is achievable maybe in 18 months or 24 months, that's debatable. But if the debt is reduced, I think it would start getting that sort of a premium valuation. So the sense here is that somebody having a long-term view of 2-3 years, it should be sort of a candidate to be sort of accumulated on dip.
Okay, a couple of other stocks which are going to be in focus today, and we've been highlighting how there would be the OMCs which continue to be in focus after that mammoth rally that one has already seen play out. Look out for the Goldman Sachs upgrade, which has come in for HPIOC to now a buy. Remember, BPCL has been one of the stupendous most movers, and it seems like HPIOC will also play catch up after that big move which transpired on Monday. Cipla has launched a skin treatment drug in the US. Look out for this stock as well. GSK Pharma is going to suspend the sale of one of its drugs. Look out for that as well. And NTPC, which has inked a memorandum of understanding with HP to set up hydro plants. That's also another stock which is in focus. Sterlite Tech, the unit is looking to buy Impact Data Solutions, the price consideration for which is unknown, but that's going to be another stock to look out for in trade. Devang, wanted your thoughts on OMCs. There's lots of chatter in the market about divestment, whether or not they're all going to be merged into one. Do you think from an investment perspective, OMCs are an attractive bet, or do you think at best, there's just a trading play?
I think this clearly depends upon the news flow in the market, and we ourselves have never got into sort of this type of PSUs, and second being cyclicals in the way that the dependence is more or less on the crude part, as well as again there is a negative or a positive news flow which sort of impacts. If the strategic divestment of BPCL is what the street believes, I think there will be a bit of a re-rating on the cards. But as I said, it would be more a speculative set of news. So we would sort of avoid the oil marketing space at this point.